Going on, traders? I want to do an update on Bitcoin. And, some of our discussions in our chat room today, I thought it would be a good opportunity to talk a little bit about the psychology of trading. And on one of the topics on that is this idea of what I call letting the market take you out of a trade. And this is critical because in trading and investing, when you're taking risk, what ends up happening is money creates a lot of emotion for us as humans. So the fear of losing money, greed, all that plays in. Everybody pretty much knows that. But when you actually get inside a trade, and you can feel this sometimes if you've ever had a lot of risk on, like I can tell you from my experience that it can be absolutely paralyzing, the amount of fear that is associated with losing money. And I've been on the bid in the treasury market for 200 million tens and gotten hit or started to get lifted, and I've had screens go down where I didn't even know my position. Or sometimes what would happen is I would be buying into a position with the idea that I'm selling to a customer, and the customer cancels, and he cancels right when you're getting hit or getting lifted. And what that means is I'm getting filled on the screens. So I'm buying 1 million, and then I'm getting filled on a 5 million lot, and then I get filled on another 3 million lot. And we used to call it getting sprayed, which was where the screens would go a million, it goes ding, 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 and you get a million, a million, a million, a million, a million. And you have to count and figure out what your position is. So we used to yell to our guy that would sit behind us, our back office guy, and we'd be yelling, "What's my position? How many did I buy?" Because it's impossible for us to add up on both screens. And the reason that's important is because you got to know how much you're long. Am I long 20 million tens? Am I long 100 million? I got sprayed. What's my position? And when the customer cancels, then I don't have the backstop, where I'm not able to buy and sell it to him and unload the position. So then I have the risk, and I'm wearing them. And so believe me, when you buy 50 million, $100 million position, and you don't know the market starts dropping on you rapidly, or your screen drops, the simplest things, like being able to count, okay, I see I bought 1 million, I bought 3 million, I bought 5 million. Okay, 1, 3, 5, that's 8, that's 9. The simplest thing, like literally adding up 1 million plus 1 million plus 3 million, is you can't even do it, because the fear is just paralyzing. You literally can't do simple math. And I remember a few times that happened to me when I started trading bigger size, and it is tough to work through. As a trader, then you go through those experiences, you know how to hedge. You just, immediately you'll sell some fives down to minimize your risk. If the market keeps going down, those fives will hedge you. You can call another broker to hedge you also. You can buy futures. But anyway, there's a lot of motion involved once you get inside a trade like that, and just when we're trading Bitcoin. And so I see a lot of the emotion come out when we get to big points in the market, which is totally natural. But what I wanted to say on that is, I think as traders, we're seeing, as a trader, you always want to work on yourself. Okay. You're always trying to get better. That's what I love about trading, is it's a lifelong process on getting better, getting more disciplined. There's so many things you can work on yourself to help you to be a better trader. But a lot of times, the easier thing to do when you're trading is take the you out of the equation, or take your ego out of the equation. It's easier to trade when you take the emotion out. And one of the ways you take the emotion out is removing yourself, which is the ego step, putting that aside, and then having a trading model or a process that trades, and let that take over. So my trading tends to be much more mechanical, because I've gotten to the point where I've built a model, and I constantly ask myself, well, what is the model saying? Well, what's the model doing? What's the process? And when you do that over and over, it's not a, I don't get emotional about trying to figure out where the market's going, or, you know, I think it's doing this. If you find you guys find yourselves thinking a lot, saying, well, I think the market's going to do this, or I felt like it was going down, or I was waiting for a pullback, or I felt nervous, or I felt this. A lot of you are doing way too much thinking, way too much emotion, and that's the ego. Well, I don't want to be wrong. I think it'll go back up because I'm down in my position, and I think this because I don't want to, you know, I'm ignoring this market information because I really know that Bitcoin's going to reach this certain target and this Elliott wave pattern is going to play out, or, you know, the fundamentals on Litecoin or this, that, and the other, and I know beyond a shadow of a doubt that it's going to triple in 6 months. When you start building that into your mind and you start energizing an idea like that with your emotion, you're going to ignore, guys, so much of the other market information that's coming back at you. Like, okay, you're breaking this level. Okay, now you're making a lower low. And the ego is going to take over, and you will defend a position. You will defend an idea that you have, that you've emotionally charged as, well, I'm passionate about this. I know I'm going to be right. This has to happen. And when it starts to not happen, the psychology part of the human brain, well, you will actually start to defend, and you will start to block out the other information that's telling you you're wrong. And as a trader, that's where I see so many people blow up. I've seen it on the professional side. And so one way to minimize that is you can constantly be aware and trying to monitor your emotions, but it's almost easier, guys, just to let the ego just get rid of it. You don't need to work about changing yourself. We all have different personalities, but just take it aside and let the model trade. All right. So tying this into when to exit a trade, some of you are deciding on your own based on fundamentals or a news story, or something happens and it changes your mind and you decide you need to get out, or you get fearful, or your Bitcoin Cash is going to do this, or there's this pump, or blah, 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 there's this fork. And you guys will talk yourselves out of a position. And I call that you're taking yourself out of the position. The ego is taking you out, not the market. And so what I mean by letting the market take you out is it looks like this. I have several strategies for getting out of a position. There's different trailing stop methods you can use. But one of the most powerful ones is obviously just staying long until the trend breaks. So if we want to play something long, we're going to play that 80–90% of the time with the current uptrend. So some of you are, some of you have been out of Bitcoin for whatever reason you've created. That's the ego. I thought this, I blah, blah, I'm out of my position. So now you don't know what to do up here at the highs because it's already had a good run. You shouldn't really be buying right in front of the all-time high resistance. So when we're trading longer term, my mindset is I have a core piece that I will never sell. If you had that mindset, back in the 80s when Apple, whether before or after they almost went in and out of bankruptcy, it doesn't matter. If you bought Apple and that was your mindset, you would never sell it. You would be glad that that was your game plan and your mindset. Some people, after it double triples, they say, oh, that's it, I'm going to get out of everything. And then they lose their position. And these markets will tend to run further than you think, guys. I mean, 10,000 is a good price target. What if it goes crazy, it goes to 20 first before we have a big correction or a big bear market? Markets will run farther than you think. So what we want to do is you need to have something happen in the market, like the trend needs to break down, some sort of metrics that takes you out of the trade completely. Not just you decide. No, the market gets to decide, or the model gets to decide. So in my model, I don't get out of my position if I'm bullish and something's trending until it breaks trend. So for me, I can look at that on the daily or the weekly when I'm talking about the longer term. But real simply put, I mean, these are higher lows, higher lows. We're riding the 8, the direction of the 8 is rising. You're not going to get me bearish or completely flat Bitcoin unless you basically take out this higher low here and take out the bands. That's all the way down to 3,000. So I will get more heavy, obviously, at certain points. Like we got more aggressive here, and I've been taking some profit into these highs here. But I'm not going to get out of all my position until it breaks trend. So that's a simple strategy where you just keep moving your stop, whether it's a mental stop or a hard stop. You just keep moving it up with the trend, and not until that pivot breaks like that, boom, then you stop out. Once the trend changes, then you get flat. Okay, that's just one trailing stop method. It's called the pivot method, I call it. And I'm just following this trend, moving my stop and mental stop. So a hard stop is you can actually put it in the market, like a buy stop. If this breaks my level, I'm going to sell. Or it's a mental stop where, okay, the trend's broke, uptrend's over, boom, I'm either flat or I'm starting to think short. Right? So guys, there's things like that you need to learn. That's just it's just something that comes with experience. I've been there so many times where I've exited a position because I thought the market was done going up, or it picked some magical point in time and some magical point on the chart that it should stop going up, and it just keeps going and going. And those are some of your biggest winners, because everybody can't believe how far it went, and they start shorting it, and then it takes the shorts out, and it just keeps going and going and going. And you've lost your position because you just decided when you were going to get out. So I've done it lots, guys, but that's a simple thing that you got to start thinking about, is always on those last couple pieces, let the market take you out. You shouldn't be ending the trade. The market, something in your process, the price action changes and it does something on the chart. That's what gets you out. It's not your decision. So anyway, guys, if you want to learn more, this is the stuff we learn on the model. I would just encourage everybody, it's the best investment you can make isn't in yourself. Anytime you learn a new skill set, we should all be working on our skills, but trading, this is my passion. I've earned, I haven't taken a paycheck in over 10 years. Everything I've made from directly trading in the market, guys. So this is my skill set. But if you're a public speaker, doctor, as an entrepreneur, I'm always trying to work on my different skills. But when it comes to trading, guys, I mean, talk about, I don't know what type of return you can get when you can invest $1 or $2 grand in my program and learn 9 hours of my institutional model, and you have it for the rest of your life, guys. I mean, that's a self-worth question. Do you guys think you could pay $2,000 and learn something high level trading, a process that somebody spent literally 10, 12 hours a day, every day the market's trading, looking at charts, having risk on for 10 years, taking positions overnight? I mean, I had Goldman Sachs work my orders, RBC work my orders overnight. They'd pass them from London to Tokyo. I mean, it's not even a 10-hour workday. I'm looking at the charts and trading for so long, guys. You can learn all that, get all that experience for $2 grand. And do you have the self-worth to say, I think I can spend that, and in the next 10, 20 years, I can make money from that knowledge, even if it's just 1 or 2 ideas? Do you think that's worth $2 grand? Over 10 years, you can use that skill set, or you can use, I mean, that's why you go to seminars. That's why I paid 12 grand to learn Forex, because I knew if I just picked up one idea, I would take it into the treasury market and literally made millions as a desk, myself, customers, off simple ideas, because I knew, okay, that's worth it to me. If I pay that, I can take that over a career, a course of a career into the markets, and that's going to come back to me many times over. So guys, that's what I did on the model, or as far as the training. So go to jenkinsrm.com, services, the crypto coin team, and then this right here is what I'm talking about. This is the training, guys. This is where you build these skill sets I'm talking about. I cover the model as far as the origins of our model. Has a lot to do with physics, energy cycles, wave formation, and then there's a lot of patterns we get into as far as the technical analysis, and we have cyclical analysis, and I do the psychology of trading, and I put it all together. We talk about how do you manage your risk, position sizing, stops, trailing methods. You got to put it all together. That's the key, guys, to really getting the consistency. All right. So I hope that helps. And then if some of you are really committed to this, and that's what the group coaching is all about. So I spend time with traders every day, and we work on our game. We work on their trading. We build the right habits. So that's obviously a higher commitment, but that's where you really learn the most, is being inside of trades together, all that good stuff. So anyway, guys, hopefully that was beneficial. I don't say this enough too, guys, on the YouTube stuff. If you subscribe, you like, turn on the notifications, that just helps us build the awareness and just keeps this momentum and growing everything, and we can just keep adding more and more value. All right, guys, enjoy the rest of your evening.